Hi, welcome to the Market Alert for Tuesday, the 10th of March 2020. So, Black Monday Part 2, absolute carnage. And no doubts about that yesterday. But don't worry, Trump's coming to the rescue as the oil price and stocks rip higher after Trump promises very dramatic action to support the economy. Well, that's the same old rhetoric that we've heard time and time again. Well, certainly what I've heard through the last 30 years when there is a market crash and massive pullbacks. But we'll wait and see. It's certainly going to help the market in the short term, that's for sure. But yesterday, I sent a note out because just after recording the Market Alert, the Dow Jones chart stopped updating because of the drop. The circuit breakers were implemented. I phoned the brokers just to double check that there was no problem with the data, and this was the case. I asked when they were going to come back on, and they said they didn't know. They would have to wait and see what the cash market did at 1:30, and here you see the cash market opening and the market dropping another 985 points, having dropped 900 on the overnight as well. However, it didn't take long, did it, before the Federal Reserve, the trading arm of the Federal Reserve, got on board and brought the market back 900 points. Then retraced to the 20-bar moving average. Prices closed back above it. You can see the buying there again. And then prices moved higher once more. So we had a 76% retracement. And then we slid all the way back down as the market didn't believe what they were being told until Trump's cavalry came out and moved the markets back to the upside. However, overnight, the market has moved hugely to the upside. Again, no surprise, we saw this last week when we had carnage on the Monday. So a massive 1,137 points moved back to the upside. The volatility was something else yesterday. I did trade and managed to grab 100 and odd points at one point and then decided to stand aside because even in the 1 minute chart, prices were moving over 100 points in less than a minute. That's how wild it was. In the daily chart, you can see prices reversing there. The reason we've got low volume is because they were shut from 7 in the morning until 1:30 p.m. as we're on daylight savings at the moment. So that's why the volume is low, but that would have been huge. The volume would have been a huge sell there, so don't be misled by what you're seeing there. What was really interesting is the market traded to the 200 MA in the weekly chart and bounced off this. So again, the 200 MA coming to the rescue as they see prices moving higher. And then in the monthly chart, we can still see the correction there. It's certainly not over to the downside, but I would expect your interest rates to be cut before the meeting, end of month, and also QE4 or QE5. You lose count of these things. QE4 is already in existence, but they're denying the existence because it's treasury bills and not treasury bonds. So semantics there playing a part in admitting to whether they're actually have QE4 in the markets already, which they do. So yeah, anyway, implied volatility. Yeah, brace yourself for this one because you can see there 52.36 the market rattling up there, and the market moving down. What's interesting as we move through these, you can see there the color-coded version, but this is the all-time, well not all-time, this is the data that I have, which I've updated every day from 2006 all the way through. This is my own chart that I've created of the implied volatility, 52.36, 72.62 for the now termed the Great Recession. I don't know why. I would have said it was the biggest crash in history myself. Until they started pumping QE into the markets and inflating the market back to record highs. So yeah, 52.36 is where we're at the moment. Expect a breather, expect the cavalry to come in, expect another dead cat bounce, going forward, and a decrease in the implied volatility. Watch for a 50% reduction in the implied volatility before the market moves lower once more, unless of course something comes out of the woodwork. The main issue yesterday was that crude oil dropping below $30 a barrel, and again you can see this having moved back to the upside. This is the daily chart. Let's just drop down into a 4-hourly chart, and you will see the market moving higher off this. Let me just put some volume on this chart so we can have a quick look at this as well, and you can see the buying coming back into the market to support it there. There's the volume in this bar is more or less the same size as this bar, and then prices have moved higher. And if you move down the scale there, you can see the volume coming into the crude oil market and moving the market higher there. And as you go lower, you'll see exactly the same thing here, all the way down until you get to the point where the buying came in, even down to the 5-minute chart there. So yeah, that's the reason. It'll be interesting to see how the crude oil market manages to move back to the upside, given the fall off of global demand. And now Italy is in lockdown. You can only go to work. Bars are going to be closed in the evenings. It's turning into a bit of a farce, frankly. And a lot of hysteria over nothing. I don't know whether this is engineered to happen like this, so that the financial system is brought down in a controlled demolition, as it were, because it's just bizarre. There are more people dying from normal flu. When people have flu, there's no quarantine or none of this nonsense, and I'm sure that the spread of it is no different than the coronavirus. So it makes you wonder what really is going on, because this is very, very odd indeed. As particular the lockdowns, and also the fall off in demand for things. In fact, let me just show you a couple of other things before I can. Okay, the first of these is the airlines, casinos and hotels and cruises have fallen off a cliff. And also from Bloomberg, empty skies. It's interesting here, actually, because if you go back to 2001, when the Twin Towers event occurred, and 2008, the Great Recession, and 89, the dot-com bubble, that one is there. You can see that there was a drop-off in air travel, but look at the current drop-off here. And like I say, all of this is just alarmist. It is something else. Like I say, for me, something else is not right. There's something not right with this at all. I say all of the hysteria and craziness that's going on. But we'll wait and see. Like I say, my theory is it's one way of controlling the demolition of the financial system that is absolutely overburdened with debt, that is going to become unserviceable. So the best thing to do is to make sure that no individual central banker, that was with a B, not with a W, doesn't get any of the blame. Okay, that will do it for this one. If there is anything else to report and any more circuit breaker news today, I will let you know. But watch the madness continue to unfold. As ever, thanks for watching. See you in the next.